Good morning, Alex. Thala, good morning. Nice to see you. Hope everybody had a great weekend. Vittorio, good morning. Hope you guys rested your brains. Good morning, Dave and Alan. Nice to have you. Maybe studied a little bit, took a look at some stuff. Um, Ask yourself some questions, gave yourself some answers, all those good things. Good morning, Ron. Ron, did you find a market with some momentum this morning? Let's see what you got. Well, you most certainly did. Termination condition, odds favorable, momentum, clear path. A little bit of the in and out. Nice job, man. Great looking trade. All comes off a chart reading, right? Each and everything that you do just revolves around more momentum than you have right now. I like it. It's all about those rules, right? It's about having advantages, and when you have those advantages, take the trade. If you don't have the advantages, sit on your hands. And that's what we're going to talk about today. We're going to talk about advantages. We're going to talk about starting simple and then just growing. Going to give ourselves a little permission to be new. Good morning, Luciano. Focus on the advantages that are present when they're there, turning it into a trade. So without further ado, let's do the Monday morning routine. The first thing I do every morning as a NinjaTrader 8 user is I go through the stability instructions. I'm going through and I'm making sure cash, tick, temp, workspaces, recovery. If you're using NinjaTrader 8, there's two things that are going to help you stay stable and comfortable. And the first thing is going through this routine. Just religiously, every morning I'm going through and I'm going through this routine. I'm making sure that my computer is set for its highest performance, all that good stuff. And guys, I'm not going to lie to you. I very rarely, if ever, have a challenge with NinjaTrader 8. Sometimes I do, but for the most part, I'm not. The second thing is make sure that your computer's up to snuff. NinjaTrader 8's a workhorse. So I know John Novak seems to never crash, and I probably just jinxed him because of it, but he has an absolute powerhouse of a computer. And if it's time for an upgrade anyway, I like to share this link because I'm pretty sure I'm going to treat myself to one of these. Easy Trading Computers has put together a package designed specifically for Nexgen users with anything and everything that you could hope for and all the power that you could hope for. And then finally, guys, I get my day going by checking news. Making sure that there's nothing going on in the world and no news releases that are going to make people with deep pockets act irrationally. I don't trade what the news is. For example, tomorrow morning, there doesn't appear to be any news today, Monday, April 24th. But tomorrow, April 25th, there's an HPI. I don't know what HPI is. It doesn't matter. What I'm looking at is these impacts: high impact, medium impact, and low impact. These high and medium impacts can be market movers. People are waiting for the information, and they're making trading decisions based on that. And it's typically people with huge amounts of money in the market, so it can create spikes one direction or the other. So just an awareness of what's going on. I use forexfactory.com. Feel free to use any news source that you like. And I whittle mine down to American markets. I'll use the filter. I'll go for high, medium, and low impact, and I'm just looking at the U.S. markets. If all of these are checked, you're going to have 1,000 different things. You'll never trade because there's some sort of news release in every time frame in every world. So great thing to check each and every morning. And guys, we're going to ease into the week. We're going to go to the education page, Nexgen education page. And I'm going to click on the tutorial section. This is where I get all the information, guys. This is where everything that I talk about comes from. It is really, it's, excuse me, it's a foundational approach. And I like that approach. It's You are going to start small. You're going to start basic. You're going to focus on the absolute best of the best. And when we talk about the first hour of class, and on Mondays, I like to ease into it a little bit while you guys get in and wake up and drink your coffee. Um, but our first hour of class is really focused on a high probability trend trade. And this is a trade where all charts agree. Every indicator on every chart agrees for the rules or with the rules for the trade. Typically, this is when all the triggers are their strongest and no termination conditions exist, and there's room between your entry and your target. Guys, this is a trade that when you learn to execute it, and it'll take you a couple weeks to get comfortable, typically wins 70 to 80% of the time. And that's not why we're focusing on the high probability trend trade as brand new users, as people coming back looking for consistency. What you're going to find is that when you can execute a high probability trend trade, you're going to be able to read your indicators. You're going to be able to read your charts because 90% of what you do throughout the day is going to be chart reading. Nobody ever believes me in the beginning. 90% is just going to be reading your charts, waiting for advantages. 10% is going to be taking those advantages and entering a trade. Chart reading mastery incorporates 3 essential elements, and you're going to incorporate these into your trading. Where the market is likely to continue, and that's how you're going to enter the market. You're going to look for these continuation points. Where the market is likely to go is going to help you develop a management plan that has you looking for targets that make sense based on momentum, targets that make sense based on Fibonacci. And then finally, you're going to be able to understand where the market is likely to stop. And I feel like this is one of the most important things that you can understand because areas where the market are likely to stop are what we call termination conditions. Termination conditions may end a trend. Termination conditions may cause a reaction that might pull you out of a great position otherwise. And then termination conditions are going to act as an anchor for that highest probability trend trade. When the market reaches one of those areas where it's likely to stop and reverses, we're going to focus on that highest probability trend trade after that reversal from a termination condition. So those 3 simple concepts, by the end of your first 30 days, you're going to have a good understanding of what it is. And then you're going to be able to take those concepts and understand the rules for a high probability trend trade and how they use it. These are your rules right here for a high probability trend trade, and it's only 3. Remember, we're embracing simplicity. We're brand new, focused on the absolute best of the best and developing an ability to read charts. And this high probability trend trade gives you the recipe for the trade right here in yellow. Each of these yellow phrases or words, momentum, clear path, entry area, these are advantages that your rules provide. So your 3 rules for the high probability trend trade, creating 3 advantages, and it's going to do it on only 2 charts. We're going to use a large chart to determine the overall temperature of the market. What's it doing? What's the big crowd say is going on? You'll be able to determine using only the most current bar the trend of the market. If the background is green, we're in an uptrend, only looking for rules to be met for high probability trend trades long. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short, guys. The best and first advantage that you can give yourself is trade with the trend. We're looking for a high probability trend trade. Fighting the direction of the market is rarely advantageous. Next, rule number 1 has to be met. And rule number 1 says strong triggers. And strong triggers is going to give you the advantage of momentum, that first piece of the puzzle for a trade. Rule number 2 will be met on the 13-2 chart. No termination conditions. No areas where the market is likely to stop. Whoops, that's going to provide you the advantage of a clear path. 2 advantages from 2 rules. And when those advantages are present on the 13-2, you're going to go to the 5-1 chart and you're going to refine that overall look of the market. You're going to be able to go to the smaller, faster chart and recognize where the market is likely to continue. And you'll do that, and you'll actually use a limit order to buy or sell a pullback at an area inside of favorable large triggers, meaning that you're going to be able to pinpoint with such accuracy that you'll be waiting for the market to come to you. And that rule number 3 on the 5-1 gives you the advantage of an entry area, that area where the market is likely to continue. So 2 charts and 3 rules. And when you put these together, they're going to provide you the high probability trend trade. That trade that's going to carry you through your first 30 days and beyond. That trade that's going to teach you how to read your charts to gauge these advantages. And if you keep it simple, 20 trading days, guys, that's your first 30 days. If you started on April 1st, by April 29th, you're going to understand chart reading through simplicity, through keeping it focused. You're going to understand entry areas. And if you really focus on just entries, finding that best of the best spot, great entries create very manageable trades. So we're going to go into the rules here. If I have new people, if you're brand new to Nexgen, if you are coming back looking for that consistency, if you're learning the software and trying to simplify and put yourself in the best position, please remember, this is your class. I do my best to keep it from being a 3-hour lecture. That's not what I want, guys. We're going to go back and forth. You and I are going to just have conversations all day long, because the path to becoming a confident trader is really a 2-part process. Learn, post your trades in class. Everything you do, win, lose, or draw. Show me what you're doing so I can give you feedback. One of the biggest mistakes that I see new users make is they post a lot in their first couple days, and then they feel like they have to go off and do it by themselves. And maybe they're struggling silently in the shadows rather than getting that feedback. Guys, I'm here 15 hours every week live to talk to you about anything and everything that you want to talk about. Make sure you take advantage of it. It's like you're getting a private session every time you ask a question. And then the second part is making sure that you're tracking your progress, guys. Nexgen's provided you a spreadsheet where everything that you can do, you can put into the spreadsheet, you can come back, you can study it daily. And I'm telling you from experience that repetition is the key to success when you're learning the software. Trying to do the same thing per the rules over and over until it becomes second nature, until you understand when it's okay to trade. My job is to teach you the rules. Your job is to ask me questions when you have questions about the rules. You'll be simulating daily. NinjaTrader allows you to practice these rules without fear of losing money. Post pictures of everything that you do until you're sure you have those correct rules. We'll talk about each and every trade. Avoid taking the wrong trades. You'll make mistakes, but avoid jumping in, avoid jumping out, avoid trying to bump up your P&L just fictitiously, because what it's doing is it's setting you up for long-term failure. We're going to simplify. What looks will you commit to? Well, the only looks you're going to commit to are when the rules are met. So we're going to talk a lot about the rules, and you have to learn them so they become easy. Repetition will make them easy. And then you have the ability to use market replay to go back to practice on the weekends, to practice after hours, take a lot of pictures and repeat this process every day. And that's what we're going to do. We're going to start off this morning by going through the 3 rules, identifying the 3 looks, and making sure that you guys are comfortable with what they're going to look like on your chart. And the first rule says that you have to have strong triggers. In an uptrend, when your background is green, strong triggers mean that your small triggers, the faster moving triggers, are above your large triggers, these dash triggers. And it's the space created between the two that let me know that the odds are favorable for the market to continue in the direction of the trend. And you'll hear that in class a lot. Odds favorable momentum. Did I have odds favorable momentum going into that trade? If the answer is yes, well, you're already a third of the way to being successful, right? In a downtrend, small triggers below the large triggers are wide. It's that space created between small and large, excuse me, that lets you know that the odds are favorable for the market to continue down. So strong triggers are going to provide odds favorable momentum. When those small trigger lines break back inside of the large triggers, we call it a weakening of the large triggers. And when the large triggers are weakened, anything can happen up or down. You really forfeit the advantage of momentum. And if a trade relies on advantages, well, then it's important to make sure that that odds favorable is in place. And what you're going to see on your 13-2 chart, when there is odds favorable momentum, is you'll see these wicks or these tails on a 13-2 bar. And those wicks are really nothing more than a potential pullback on your smaller, faster chart. And it's going to be that refinement process. These wicks become potential entries. And this becomes valuable as you go back because it's going to become a study tool for you. If you go to the live market and you look at the S&P here, there's those odds favorable momentum. Go ahead and start training your brain to look for these opportunities, to circle these tails when those triggers are their absolute strongest. And when we talk about entries, we'll come back and take a look and see if those were actual entries. So give me a why in the room if you're with me, please. Guys, if you're brand new, if you're focusing on consistency, if you're trying to get your mojo back, getting back in with Nexgen after a little hiatus, odds favorable momentum is really going to be the first advantage that you give yourself, making sure that this market has all sorts of giddy up behind it to keep it pushing in the right direction. And ultimately, you'll begin to see these tails and recognize when these advantages are happening. I feel like odds favorable momentum is really going to be the easiest thing that you recognize. You're going to be able to figure this out day one. Either the triggers are separated or they're not, right? Either the smaller above the large or the smaller below the large. And committing to that odds favorable momentum, you'll see it OFM in the classroom, is going to create that advantage. So I like to share this picture in the room, just a reminder. Anything can happen, sitting on your hands, odds favorable, looking for opportunities. Anything can happen. Notice how the market reverses when that momentum begins to go away. And then guys, this is going to be one of the key things. You're going to see when those trigger lines don't agree with one another. This is nothing more than those deep pocket investors trying to work things out. And this is where Nexgen users have the advantage. You can sit on your hands and do nothing when there's nothing to do. And this is where most people find themselves trying to predict what the market's going to do. Good morning, Bobby T. Let them figure it out, and then we'll wait for that advantage to get us in. Rule number 2 says don't trade into a termination condition. Those areas likely to stop the market. And those areas can be, let me give you a picture. I love visuals, right? Makes it a little easier. What are the areas that may stop the market? It may be a divergence high. Excuse me, guys. Allergies are full tilt boogie up here in the Pacific Northwest. It may be a divergence high. And a divergence high just means that there was a loss of momentum. The market went up, the market went down. When it did, there was a loss of momentum, this magenta line prints. And you can visually see that this was an area in the market where it was losing steam to the upside. The same is true for a divergence low. The market goes down and up, and that pivot, there was a loss of momentum. Creates a cyan line. Visually, you can see where the sellers ran out of steam and the buyers pushed back. It can be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. It can be a mid-band if the large triggers remain a full bar away when contact is made. And we'll find examples of each and every one of these. But recognizing a termination condition is a pretty simple 2-part process. 2 things have to happen for an area to be considered a termination condition. The first thing is that price reaches an area, meaning that the price bars, if it's in an uptrend, will smack right into resistance. And when price reaches resistance, all you have to do is ask yourself, Where are the trigger lines? If the trigger lines remain below the area that's reached, the area is not broken and there is no advantage of a clear path. We consider that path to be clear once again when both the small and the large triggers break above the area. So simple two-part process. Price reaches the area. Where are your trigger lines? Trigger lines remain below on resistance. No more long trades into that area. It's an area that may reverse the market or create a bounce. Price pulls all the way back to support, all the way back to that mid band. Absolutely none of your trigger lines have gone below that area of support. No short trades into that area of support. It may create a bounce. It may reverse the market. 90% of what you do throughout the day is going to be reading your indicators, waiting for advantages. One of the things that I like to point out here as well is when price accelerates away from those large trigger lines, reaches Fibonacci support resistance, a mid-band, and those trigger lines remain a full bar away, price is likely to snap back and close that gap. And that's when your mid-band begins to act as a termination condition, when those large triggers remain a full bar away. What ultimately happens in this picture is price retests resistance, right? It reaches resistance, that divergence high, a second resistance. This is what we call a pivot stop out of the divergence high. And when this happens at resistance, this becomes a very powerful termination condition. And when a termination condition creates a full reversal, meaning that the smalls get to the other side of the large go from green to red, ultimately there's odds favorable momentum. This is that anchor for your highest probability trend trade. This is what we call a strong top. Or on that same token, price reaches support. None of the trigger lines break through. The smalls break above the large go from red to green. We get a full reversal that creates odds favorable momentum with a clear path, and there's one of those tails. There's one of those potential entries for your highest probability trend trade long. So guys, I'm going to ask, I've got 32 of you in here. Is everybody okay with termination conditions? Keep it simple. Price reaches the area. When the area is reached, if none of the trigger lines break it, guys, you've given away your advantage of a clear path. Both small and large break above or break below. That clear path is there once again. You're looking for that odds favorable momentum. And there's another one of those tails, one of those potential entries for a high probability trend trade long. This is the most simplistic approach to what we're doing, guys. There's going to be a look as you grow with the software when those small triggers begin to break through an area, whether it is support or resistance, but the large triggers haven't yet followed. There is no clear path. What we have here is with the momentum, the 6980 resistance has the potential to break. It has the potential to break because of the momentum. It becomes more powerful if it's coming from a strong top or bottom, but it's not a clear path. And this is going to be the look that new traders are going to recognize for their first medium probability trade. Remember, we're focusing on the highest probability trade for the first 30 days. This medium probability trade, when areas have the potential to break, is typically the first one that Nexgen users take. And it's defined as when most of your indicators line up for a trade. However, a small issue exists. Your chart reading identifies the issue. This will ultimately be the vast majority of your trades. When executing medium probability trades, you'll take these trades and manage them assertively. And if there's trouble in your way, you might take a portion of the position off at that trouble. 30 days on your highest probability trend trade when everything agrees is going to put you in a position to take and manage these medium probability trades. But it's important that you understand the basics so that you may. So understanding termination conditions. Is everybody comfortable with the two-part process? So far, so good? Sometimes the market turns from nowhere, right? We've all seen it. We have a clear path, everything says down, the triggers say down, and that market goes up. Or we have odds favorable momentum, everything says up, and that market ends up going down. This final termination condition, whoops, wrong picture, is going to help you identify on a smaller, faster chart, on that 5-1 chart, that change happening. And this is the only termination condition that I'm looking for really on a 5-1 chart. And it's 3 divergences in the same price range. It may terminate the trend. 3 losses of momentum in the same general price range may terminate the trend. You'll see it from lows and you'll see it from highs. It becomes even more powerful when your trigger lines go from odds favorable to anything can happen. So not only are we visually losing momentum through the divergences, but we can also recognize it through the trigger lines. And then it becomes more powerful still when that third pivot is higher than the previous from a low or lower than the previous from a high. Because not only could price not exceed, you're also losing momentum. So each on its own is a termination condition, but you can begin to compound the probability with weak triggers or higher pivots. And you'll see this look from a low or this look from a high in instances where the market appears to be turning without having reached an area. So this is the only one that I'm going to use on that smaller, faster chart to identify that potential change. But if we go back to the market and we open up that 13.2, can identify resistance, no trigger lines through, great termination condition, creates odds favorable momentum, right? Market pulls all the way down, those anything can happen triggers. And the market seems to reverse, but gives us odds favorable momentum, and it continues right up to Fibonacci resistance, where those trigger lines appear to be weakening. So your job for the first 30 days is to just come through and begin to recognize these patterns, study them, take pictures of them, present them in class. Ask over and over, hey Mark, am I reading this right? Hey Mark, I'm writing my rules on the chart. Was this an entry? And I want to see if we got 3 divergences from the low. We didn't. We got 2 divergences with a higher pivot, with weak triggers, with weak triggers. And you can visually see how that advantage of momentum is being forfeited. So with odds favorable, absolutely nothing in the way. It's time to find that entry. It's time to pinpoint where the market is likely to continue. And when the rules are met on the 13.2, this is going to be the look on the 5.1. If we're in an uptrend, if the triggers are strong, if there's nothing in the way, your 5.1 should be going to the upside with an awful lot of strength. Nothing but green bars, smalls outside of the large, and the large should be wide. Both the large and the synthetic should be trending one on top of the other. And when they are, we call this favorable large triggers, meaning that they're overlapped, that they're strong in the direction of the trend. And it's this tight look where they're one on top of the other that's going to make it easy for you to create a window of opportunity that really minimizes, pinpoints, narrows where that market is likely to continue. So rule number 3 says that we are going to use a limit order. We're going to wait for the market to come to us. And we're going to use a limit order to buy or sell a pullback at an area inside a favorable large trigger. So when everything is going up, you're going to focus your attention on these large triggers coming up strong like a shark about to breach. And you're going to identify the areas near them. Areas where a trend trade can originate could be fibs, Fibonacci support, Fibonacci resistance, a mid band, that green line when price is above it, or it's magenta when price is below, and one-to-ones, these yellow one-to-ones. And these are going to act as a bounce point, that area where the market is likely to continue. And we want them to be inside a favorable large trigger. So if I'm going to use a limit order to buy or sell a pullback, a small retracement in price, at an area inside of favorable large triggers, I have to wait for the pullback. And the pullback begins with a reversal bar. After all of these up bars, I need a red bar. I need a little push against that overall trend, a little push against all that momentum. And I'm going to identify the window of opportunity. For a long trade, your window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. If you're looking for a short trade, it will be that lowest point of resistance to the highest point of resistance inside of favorable large triggers. One of the easiest ways to do it is put a box around those areas inside of favorable large triggers. Guys, this is the area where the market is likely to continue. I'm going to right click and I'm going to activate a limit order right at the top of that window. And if price pulls back and hits that highest point of support, remember it is the highest point of support because of the momentum on the 13.2, because there's no termination conditions on the 13.2. I'm now in a long position. I've bought the market at 79.21, and the only reason I've done it is because the rules are true, because I have the advantage of momentum, because I have the advantage of a clear path, and because I now have the advantage of an entry area on a smaller, faster chart. My protective stop will go below the window of opportunity where the market shouldn't go, and this is a trade that I will take 1,000 out of 1,000 times. Because when it comes from a termination condition on that large chart with all those advantages present, this is a trade that typically wins 70 to 80% of the time. Once it begins to move in the direction of the trade, I can reduce my risk below a reversal bar. I can use Fibonacci to gauge where the market is likely to go for targets. And this has each and every advantage, guys. And this is your highest probability trade. This is your first 30 days. This is your study to keep you focused on the absolute best of the best. Your job is going to be to take this every time the rules are met, to take pictures of it, to study it, to ask questions about it. And what you're going to be able to do is when you have odds favorable and you see one of those tails, you'll be able to scroll back on your 5-1. Did you guys see how it pulls back? Large triggers are down here. Even with the odds favorable, even with the tail, the rules weren't met because the areas were outside of those favorable large triggers. So I'm going to scroll back, and there we go. Small's below the large are wide, they're angled in the direction of the trend. Everything says down, it's coming from a termination condition. And the market pulls right back to a mid-band, right inside of those favorable large triggers. Guys, this is your highest probability trend trade. Your job is to circle those tails, to see that the rules are met, and to take a picture every time you see it. Two things happen with this picture, guys, and this is such an important part of your education. Write your rules on the chart. Odds favorable momentum, I sure did. No terms? Absolutely. And if you use the language each and every time, you're reinforcing those advantages. Area inside of favorable large triggers. Yep. And guys, this is a high probability trend trade. Your job is going to be to share it, get it to screencast, whether you're using TechSmith Capture or whether you're using Snagit. Upload it to that screencast cloud and post it in the room. And let's have a conversation about it. Let's make sure that you're following the rules. Let's make sure that the look is the correct look. The next thing you're going to do is you're going to take that trade, and if it followed the rules, if the feedback is there, you're going to post it into your spreadsheet. And what you're doing is you're creating a database of rules met entries that you can come back and study each and every day. Guys, this is about 150-ish, 160 high probability trend trades, 160 medium probability trend trades. And what I've done is I'm creating this awareness through repetition. Every trade I take as a new user, I check up against a checklist. Do I have a termination condition that creates a full reversal? Are my rules met? If I'm checking yes, I know that the advantages are in place. I just shared this checklist with you in the room. I'm also going to share this checklist with you in the room. It's the exact same checklist. But, whoops, it's not letting me do it. There we go. This will be the exact same checklist, but it has pictures stolen from the manual of what each of those rules mean. Helping you keep it simple in the beginning, focusing on the advantages, right? All you're looking for in the beginning are those perfect entries, because perfect entries create manageable trades. Focusing in the beginning on a plan that gets you after those, using the checklist, defining your trade, and taking an awful lot of pictures. Guys, this is an example of how to write the most basic trading plan using Nexgen software. That's going in the room for you as well. And because I believe that study and repetition is the key to success, guys, I'm going to give you my personal spreadsheet with 160 pictures of high probability trend trades on it. There are 4 items for you to download right there in the room that are going to help you find success in your first 30 days. And then your job is to watch the live market to look for examples. And even more importantly, scrolling back through the market, circling these tails when the rules are met, looking for those entries. Is everybody comfortable with the high probability trend trade? You know what you're looking for. Now it's time to study. You've got a checklist, you've got 160 pictures of what it looks like, and you have a live platform, 15 hours every week, where all you have to do is ask a question if you need a little help. It's going to be a quiet Monday, isn't it? That's all right. So let's look at the S&P. What's happening in the S&P right now, guys? Price reaches these one-to-ones. Absolutely no trigger lines break through. For the time being, we're in a holding pattern because we do not have the advantage of a clear path. We also have multiple divergences in the same location with anything can happen triggers. While this isn't guaranteed to turn the market, we have enough information to recognize that the advantages are going away. If we go over to crude oil, whoop, that's not crude oil. That's crude oil. Now we have a termination condition that created a full reversal. And it's pushing right back into support. So maybe just a moment of patience. Either support's going to break or support's going to hold. 90% of what we do during the day is going to be watching the charts, reading the indicators, waiting for advantages. Making sure that we're not trading into areas likely to stop the market, that we're not trading against the trend, not fighting momentum. And if you blow up your 13.2, look at this termination condition that creates a full reversal right up to the next key area. Look how support creates a reaction until it ultimately breaks. Guys, get in the habit of scrolling back, studying over and over these looks, making sure that you're comfortable with what you're seeing. And if you're not, take a picture. Post it in the room. Ask a question. Guys, this is the first half of class. We talk about rules, we talk about advantages. I appear to talk to myself for nearly an hour. And then the second part of class is clicking on the pictures that you guys are sharing. Making sure that what you're doing for a reason, that you're doing with advantages. Here's Ron C. And I like Ron's charts because everything Ron does begins with odds favorable momentum on the 13.2, as well as a clear path. And then when he has both, he looks for an opportunity. He's not a high probability trend trader. Ron has taken his first 30 days. He's learned to read his charts. He's learned to recognize advantages, and he's actually created a trading plan that suits his needs. Ron is a firm believer that 4 singles is a home run every time. And when you look at Ron's charts, it's the same trade over and over and over. Consistency is key. Gary 13.2 says strong triggers. 13.2 says nothing in the way. And you're looking for a pullback to an area of resistance inside of favorable large triggers. I hope it got you, Gary. That is a perfect rules-based setup. You did have every advantage. And then Ron, once again on crude. Odds favorable, off of a termination, in after trouble, out before trouble with all that momentum. Ron, great trade. Nice job. Guys, are there any questions about high probability trend trades? Are there any questions about odds favorable momentum? Are there any questions about termination conditions? Keep it simple, guys. Focus on the best of the best for 30 days, and it's going to have you branching out and recognizing more. And it appears that it's going to be a very quiet class today. That's okay. Termination condition creates a full reversal. Let's talk about the gap theory. Guys, I'll just take pictures of the market all day long and we'll share it. When is the midband a termination condition? Well, the midband is a termination condition when the large triggers are a full bar away. Meaning that if price accelerates away from the large trigger lines and reaches a Fibonacci area, whether it's a midband, Ron, there's a reason for that. Whether it's a midband or Fibonacci support, do you see how the large triggers remain a full bar away? More often than not, guys, this is a pattern that you'll begin to recognize through repetition. Price likes to close the gap to the large triggers, and you can see that it did that perfectly. This is what we call the gap theory. And the gap theory is really pretty simple. It's just saying that when price accelerates away, it's likely to snap back. I'll give you a copy of it. But you'll begin to recognize this pattern, and it's not necessarily a trade to get back to the triggers. But if you're looking and you're thinking, I need to go short, it's keeping you out of harm's way. It's keeping you from taking a short too soon because price is likely to go back and close. And you can see that it did it exactly. Right back to those triggers before it begins to continue down off that great termination condition. S&P, termination condition broke. We don't have odds favorable momentum, but we do have a clear path. So we know that we're not in a high probability scenario, but maybe a medium probability. And as you grow with the software and you begin to learn a little bit more, these may become trades that you take. If you think you recognize a pattern, take a picture. Post it in the class. Ask if you're seeing things the way you need to be seeing things. Going to be a quiet day, isn't it? That's okay. Market will wake up. It always does. So until it does, I'm just going to share something with you here. Guys, this is your example trading plan. This came about, I know you are, Jose. I feel like if I talk too much, I'm taking from you guys. So I always want you, if I'm talking, interrupt me. The more questions you guys ask, especially when the market's moving slowly, when there aren't charts for me to look at, guys, this is your opportunity to ask me anything. This is your opportunity. If you're like, man, I was thinking about incorporating an 8-range chart, but I'm not sure. I know, right? I say bring it, guys. To minimize your learning curve, and guys, this piece of paper came about. John Novak and I were drinking coffee on opposite sides of the country, talking on Skype. And we're like, how do we make it easier? How do we let them know what the path is? And this came about. To minimize your learning curve, guys, post your pictures of your trades in class. Every trade, win, lose, or draw. If you're winning and the rules are wrong, you may have a short-term victory but a long-term failure. Or you may be creating a set of rules that fits for you, but make sure that there's rules. How are you going to know the difference? You need feedback. We're here to help. If you place a trade on the simulator, you participate in class, there's no risk of loss of capital. You need someone to tell you what you did right or wrong when you're new, and that's part of the magic of what we do, guys. Every time you post a chart, it's all about you. Every time you post a chart, what do you need to do when you post a chart, HM? I need you to write your rules. Why did you do what you do? Write your rules on the chart. Guys, I can't tell you if you followed your rules if you don't tell me what your rules are. Odds favorable momentum, no termination conditions, mid-band. HM Pamp, why did you do what you did? I see that you went short, right? But you don't even have indicators on your 5-1. Why did you go short? Did you go short because of momentum, even though there's a termination condition? What made you feel as though this market was going to go down so much that you're willing to take the trade? This is the information that I need you guys to give me so that I can give you great feedback. My feedback on this one is, oh my gosh, don't trade without indicators. Get with tech. If you're having a challenge, your indicators aren't loading, something's going wrong, get with Jason and tech support. HMPAN, if you right-click on your 5-1 chart, let's see if we can get you fixed without tech. I hope you're listening. If you right-click on your 5-1 chart and go to data series, change that 10 days to load to 11 days and see if that clears up the problem. You may have a bad tick in there somewhere. That's worked for me in the past, and that'll probably keep you out of the queue for tech. See if that helps and see if we can get those indicators back on there. And then let's go to what we're looking at. Yeah, David B., that's how Jason fixed me. So HM Pimp, when you got in here, price was pulling back up. I'm trying to see, 77.58. Trying to line it up on my indicators. It looks like you got short right about here. And the biggest challenge on this one is those synthetics were so far up here. See how it closed the gap to it? So that 58 becomes a little difficult. And we're trading right into support, and those trigger lines haven't broken yet, which means that that clear path isn't quite there. I like the read. I like the momentum. I like that you were using resistance to try to get in. But what the challenge is there is we've got these big fat blue lines taking away your clear path. So great job trading with direction. Great job trading with momentum. And this is an area that looks like it just needs to clear just a little bit so that it can become comfortable with what it's doing and get you that clear path. And let me know if that fix helps. Gary, market's trending, right? Clear path. Areas outside. You say it bugs you when the mid-band trails. All right. And what happened off of that? Other than you being a little bit bugged with the mid-band trailing. Pulled back. The 13.2 looked okay, HM. What was wrong with your 13.2? I noticed that you had your indicators. This big gray field, click that arrow, and it'll slide it over. Your 13 looks solid. Your 5-1 didn't have those indicators yet, though. Termination. Termination. Gary, that's a lot of shorts and determinations with zero pullbacks. Let that trouble area clear, man. And now you've got an HVA, but you've got a stack of blue lines. Oh, that was a mistake. I've done that mistake. At least you got off on the right side of the mistake. And now that HVA, but you have support that's just, is it going to hold or is it going to break? Hell, I don't know. So far, it's holding, isn't it? Termination conditions. And guys, this is what you're doing each and every day. If I went short into a termination condition, it held. If I tried it again, it held. If I tried it again, it held. Rule number 2 kept you from trading into that big blue line. HN Pant, do you see it? Because this one definitely adversely affected your short. That termination condition, that rule number 2 in place. It doesn't mean that the market won't continue down eventually. But what it does mean is that you don't have a clear path. And if you don't have a clear path, guys, it's one of those 60% of the time it works every time scenarios. You're more than welcome to make the choice to trade into it. But you're willfully forfeiting your advantages. And when you willfully forfeit an advantage, you have to be able to manage assertively. You have to be able to get in and out of that market. You've got to be able to minimize risk. I'm not saying that there won't be a time where you're willing to trade into a termination condition. But until you can read your chart so well, large and small, recognize change happening in the moment, it's not very advantageous. Exhibit A. Does that make sense, guys? Especially those of you that are really looking to add on to what you're doing. If you give up an advantage on this chart, don't give up an advantage on this chart. You don't have to. Sometimes it's easier just to sit on your hands. If you have one of those 50-50 trades where the smalls have broken through but the large have not, right? Not a clear path yet into this area. It's okay for you to insist on a perfect entry on your 5-1, right? It's okay for you to say, man, I'm giving away the advantage of a clear path. I'm not giving away momentum. I'm not giving away the area. I'm not giving away strength. Now I'm willing to take that potential trade. Strong triggers, no term, 50-50. No divergence, tight window of opportunity. I'm not willing to sacrifice on my 5-1 when the 13-2 isn't perfect. Does that make sense to everybody? New users love maybe trades because you get to stay active. There you go, guys. Termination condition held, didn't it? But now we have odds favorable momentum. Now we have the smalls above the large. The large are wide. They're angled in the direction of the trend. If I got a reversal bar, do you suppose I could create a window of opportunity from the highest point of support to the lowest point of support inside of favorable large triggers? David B., thank you for the help. I'm not sure that there was a problem with the 13-2. The 13-2 was just slid over a little bit. And if you slide it over and you have this huge field of gray, if you click this arrow, bonk, it'll bring it right back and shorten that gray area. And then if you find yourself way behind the market, that same arrow will bring you back to the most current bar. And then guys, right to resistance. But rule number 2 kept you from getting run over, didn't it? Now we've got odds favorable, smalls are through, large are not. Area with the potential to break but hasn't broken. It's a constant state of reading your indicators. What do I see? What are my advantages? What are my disadvantages? Are my rules met? Are my rules not met? And guys, if there's nothing that you get out of this classroom, allow it to be two situations. There's only two possibilities to get into a trade. Rules met, rules not met. If you can embrace that, what you're going to find is that you begin to reduce your reliance on opinion. I hope it goes up, so I'll take a long trade. My rules are met for a long trade, therefore I'm entering the market. And it takes a lot of the pressure off of you. Guys, there's that S&P. Didn't have all the momentum, right? Losing momentum. It may continue up. A little bit of a scramble. All right, so I'm going to take a few minutes, guys. Hopefully the market does some stuff. I'm going to leave you with the S&P. We'll see what happens here. But I'm going to take a few minutes, go wet my whistle. If you take a trade, post it in the room. If you did market replay over the weekend and you took trades, post it in the room. If you have a question about what you're seeing on your chart, post it in the room. If you have a question about anything at all regarding the software, notice how I put that disclaimer in there, post it in the room. When the market isn't giving statistical advantages, guys, there's still opportunities for education. All I need is for you to ask a question or two. I'll be back in just a couple minutes. All right, we're back. So, Carl, I think what you're asking is on your 8 range on NT8, and hopefully you're listening. Make sure that tick replay is hit, and if tick replay is on, then it's going to give you those market flow bars. If tick replay isn't on, you're not going to get those dots. Let me know if that helps. I think that was the question, but it's the tick replay on 8 that's going to get you there. Luciano, a little replay from the weekend. Everything says up, right? The path is clear. The triggers aren't the strongest, but the path is clear. The path is clear. Every chart agrees, and it pulls right back to support on every chart inside of favorable large triggers and easy money. Luciana, what a effortless trend trade. Nice job. Every advantage. It's almost easy, isn't it? The palms don't get sweaty. The heart doesn't race. You're like, oh my gosh, everything on every chart agrees. It really is. I agree 100%. Good morning, David. Let's see what you got going on. David, odds favorable, clear path. You let it clear, in and out. Nice, nice. You let it clear, in and out. Very nice. Now you're beginning to lose momentum over here. You let it clear, though. Everything's going up. Everything's moving up. And then you hop out. David, I like everything about this. Odds favorable, clear path, out at the trouble. The only challenge, I think, my 2 cents, is when you begin to lose momentum, the triggers aren't really breaking through the areas yet. See how the smalls have worked their way back in. Momentum-based trades typically need momentum. On this last one, you gave up the advantage of momentum, and you can see how it ultimately turns. Great job, though, taking your chart reading. Termination, full reversal, everything says go, and you can identify using Fibonacci where that market is likely to stop. And then this is what you run into on those trades. When you start to lose the momentum, yeah, Ron, I knew you would love these. When you start to lose that momentum, sure enough, you get that change. I love it, David. Great job. And just like this, we begin losing momentum. We're losing momentum. You can visually see it on both charts. It does. Did you grab a new one? Makes a difference. Very cool. It could be a game changer. You guys look at this. Weak triggers pushes all the way back to Fibonacci areas, those 1-to-1s. The large triggers never follow, never blink, and price snaps back and reaches those large triggers, keeping you out of a potential short. Gary, what don't you see? David's trade, Ron's style trade? And it's okay if you don't. Everybody sees something different, right? Everybody sees things different. Everybody has what's comfortable and what's not comfortable. Uh-oh. David, that sounds like a great reason to make that investment. Nice job. And I think that one of the best things about what we do, guys, is trading is very much an individual sport. Everybody's going to see it different. I've had clients that see shorts, but for whatever reason couldn't wrap their head around longs. I've had people that for whatever reason kept trading into termination conditions, going one direction, maybe divergence highs, but they never traded into fibs. Everybody sees something different. So you're going to create a plan that works for you. If somebody posts in this room and you're like, man, I don't see it like you did, Gary, which is cool. It's okay. It doesn't have to be yours. It doesn't have to be your trade. And guys, that pivot from nowhere pulls all the way back to support. The market finishes the move to fibs. You see that a lot as well. As morbid as it is, there's more than one way to skin a cat, right? Your trade doesn't have to be my trade, and my trade doesn't have to be John's trade. And then, John, thank you for those links for the computers. Those are great. Is that what you got, David? Did you get one of those trading computers, the Easy Trade, or did you head out to Best Buy? I do love me some Best Buy. But I love that these guys are building them specifically for Nexgen. So if we're playing rules met, rules not met, guys, we're very much rules not met on the S&P, right? Had a local guy build it. Nice. Yours is coming this week-ish. Nice, John P. Hey guys, keep giving feedback on those. If you get those trading computers, give me feedback on them. What do we see on crude right now? We see small triggers breaking above the large triggers, but we're still working to get... You got $55 back. Nice. Let you buy a Coke at the checkout up front, right? Bobby T, yours is running great. I'm a big fan, guys. If trading is your business, have the proper tools to do your business, right? If you were a carpenter, you probably wouldn't be swinging Harbor Freight hammers. You probably wouldn't be using the Harbor Freight. Nothing against Harbor Freight. I love Harbor Freight. But when I was working on motorcycles, I spent money on my tools because that's how I made my money. Have the tools to do the job. Guys, we're just waiting to see, aren't we? 78.67 is Fibonacci resistance with absolutely no trigger lines through it. The smalls haven't made it to the other side. The large haven't made it to the other side. It's easy to look at it and say all the pressure is up. It may break or it may not. Rule number 2 says no long trades in an area that may reverse the market. How simple is that? So we start the process of if-then. If the small triggers get above the area, if that odds favorable momentum continues, and then if I get a pullback to an area of support inside of favorable large triggers, well, then I'll take a trade. And then what's the flip side? If this resistance holds and gives me odds favorable momentum to the downside, well, then I'll look for a short trade. But the bottom line is I'm just going to wait for rules to be met one way or the other. Dun, 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 dun. What do you guys want to talk about? It's a Monday, isn't it? They're behaving like a Monday. Let's do a Discord tour while you guys wait for your rules to be met. What do you think? I'm going to start up here, guys. Let me get rid of some of the noise. So what is there in Discord for you guys? John P., I don't see it. It might be your monitor. Does anyone else see in my screen flash? I don't see it on my view of Discord or not flashing. No, okay. It may be your monitor, John P. No worries. I like to do that. If somebody says, hey, I can't hear you, it's not always me. Sometimes it's just your computer playing games with you. Yeah, check a connection. So guys, let's look at this. Under the educational outline here in Discord, my new users, 101 basics. And this is the start of the 101 channel, guys. This is going to cover the descriptions of the indicators. This is going to talk about the Rinko bar, the trigger lines, the automated software. What are you getting into? This is all the basics, talking about what you're seeing, what they mean. Talking about high probability, medium probability, termination conditions, right? All those things that you need as a brand new user. And then it takes you to trigger reading, guys, and that's what we're doing, right? We're reading charts. Triggers give us the advantage of momentum. Triggers help us identify termination conditions. There's an entire section dedicated to trigger reading. There's the self-training for you guys that want to get ahead, that want to do more. And under the self-training, I love this. It's important to remember that winning is not guaranteed for showing up or loading software, putting in the time and the effort. And this talks about your entries, what we're looking for, how you're looking for it, using a checklist. What does it look like? The user guides will take you back to the Nexgen education page so that you can find those rules, find all the pictures. There's the trading rules right here, and you'll notice that it starts with the high probability trend trade. It's the easiest one for users. As you grow with the software, you may work yourself into HVA trades, momentum style trades, but everything begins right there. When you're ready to add that third chart, that market flow chart, John's created an entire section of understanding market flow. There's a whole section dedicated to chart reading and then an advanced chart reading section as well. Guys, this is all available for you in Discord. You could spend a week in Discord getting information. We had our 10 o'clock fib update, right? Right into a fib. It's interesting that it's blue. But it could be green, right? And you know that no trigger lines are through it. So you're hanging out, waiting for that termination condition to hold or break. This one breaks, small triggers above the large triggers. Large triggers are wide, angled in the direction of the trend. Guys, look at that. A pullback to support inside of favorable large triggers. Hopefully I get some pictures of this one. We have two divergences, right? But the smalls remain outside of the large. All of the large are above 78.67. The large, the small, the momentum. Picture perfect pullback to 62. What happens if a third divergence prints? It may push lower, right? 3 divergences in the same price range may terminate a trend. Right now, it's just potential. That divergence isn't true. What is true are the rules for a trade. Smalls above the large are wide, they're angled up, they're through the areas. Reversal bar on the 5-1 had me identify a window of opportunity. From that window of opportunity, the market bounced. All right, Bobby, you know I'm going to get you. Whoops, that's the wrong drawing tool. Really, guys? All right, so let's look at it. I'm going to draw a box from the top of my triggers to the bottom of my triggers. Are you comfortable with that so far? We're just identifying large triggers. So Bobby, here's my highest point of support inside of favorable large triggers. At the time of the pullback, That mid-band and support's in there as well, isn't it? So this is where I would ask myself, did I not have an area inside of favorable large triggers, or did I not have the area that I wanted inside of favorable large triggers? What do you think, Bobby? You don't show the blue fib right here? Well, then there you go. Rules not met. Perfect. And then there's a third divergence. So you're probably not sad. And that blue fib is this one coming off the 13.2 right there. Good job trading your charts. So if I do this, if I take off my tick data, I could make that fib go away too. That's a different look, isn't it? And that's the look you had, Bobby. Now your areas are below those favorable large triggers. And you're saying to yourself, that's not my best look. I love it. I'll keep those synthetics off. And 3 divergences, just in case you did have that one. Helps out. A little bit of patience. Keeps you out of it. So Bobby and Gary, good job. You had a better look than I had, didn't you? Thought I was going to get you, Bobby. You're like, no way, man. I got a plan. And I love that. You guys want to know something? I will be wrong from time to time. I will make mistakes. I'm going to leave those synthetics off there, though, Bobby. And it's never to get you. You know, I still take trades now and then, guys, and I still go through, and I'm so comfortable with my plan, and I'm so comfortable with my chart reads. And I'll send a picture to my brother, and he'll see something that I just in the moment didn't see, right? He'll do something, and he'll go, hey, Mark, did you notice this? And sometimes I'll just have to say, holy smokes, John, I didn't. I didn't see that. It's good to have a second set of eyes. And there you go. Alan, you took it. Alan said with the small still outside, he'll take it. And that third divergence says get out. Great trade, Alan. That's the one that I would have taken as well. Would have been in a couple ticks above. I probably would have caught my $100 because I love that first $100 target. That's just me. And when that divergence prints, I might have lost a tick the same way you did. Great trade. I don't disagree with that trade at all. And if you didn't take it, that's okay too, isn't it? Follow, what'd you do? Same thing. Is that gold? Trading gold? Termination creates a full reversal. Full reversal creates odds favorable. Follow directly into a termination condition. Termination condition. You get in at the best of the best area with all that momentum and take quick profits. And this is my favorite part, Thala, and this is growth for you. I love this. Guys, do you see how on no termination conditions, Thala put no? Thala was 100% aware of this fib and made the decision on chart reading to take the best entry and create a manageable trade. Nice, Thala. Guys, I'll never beat you up. If you know what you're doing, if you know that there's a problem, if you've made that decision, if you've identified it, and you say to yourself, I've got so many advantages, I'm willing to take this trade anyway, I love it. It means that you're becoming a chart reader. Solid, great job. Here we kind of overran, right? Everything went up. We got a divergence. We got multiple divergences. And now what are we doing? We're getting odds favorable. Sometimes the market overruns fibs. Sometimes someone with deep pockets decides that they want the market to do something else. Let me share a picture with you. I love this picture. This picture came about because I wanted to know my place in the market. Two types of people, I feel. There's the sharks, the big money investors, the people that are reacting to those Fibonacci areas that you guys have. There's a reason the market bounces off of fibs. We're not the only people that have them, guys. People have been using Fibonacci to trade the markets for a long time. The one thing Nexgen's done for you is it's automated the process. It's gone through and it's created, when you open your software, thousands upon thousands of Fibonacci areas. And from those thousands upon thousands of Fibonacci areas, it sorts them, it weighs them. Which ones are important? Which ones have the most concentration? And from all of these Fibonacci areas come the ones that these guys respect, guys. And we can see them and we can gauge momentum going into them. Our job is to be a remora. Our job is to let these big market, these big money people create momentum. Make sure that we're not near those areas where they're going to react. And when they give us the conditions, well, then we can look for our opportunities. Let them do the work. You take the spoils. Gary, resistance. That is resistance. 3 divergences in the same general location. High volume area with the trigger lines rolling. HVA line at the same spot as wide, small, or both triggers. The one thing you're going to run into, Gary, is by the time this market pulls back, that HVA line is probably going to be well above your trigger lines. Yep. Which creates a little bit of a challenge, right? And if we're trading rules, large triggers are here, large and synthetic. I don't have any areas inside of favorable large triggers. Rules met or rules not met? Pretty cool, right? I like it. We're professional waiters, aren't we? Notice how those large triggers are all the way up there by that reversal bar too? Maybe price will snap back. Maybe it won't. Well, they're kind of straddling it. So we'll see what happens. And this is where you can get two different looks, right? So Bobby, if I put tick replay back on mine, we'll see if it comes up here in a second. There we go. See how you can have two different looks. For that Fibonacci resistance on the 13.2, it broke. We had a clear path. And now it's kind of unbreaking, isn't it? Now those large are getting back below 67. Those smalls are below 67. We'll see what happens here. Jose, looking for that momentum style. Quick in, quick out. In at 50, out at 40. And then should have been break even probably. Jose, that is perfect execution. 100%. It's not a home run trade, right? But with that much momentum and a clear path bouncing off those one-to-ones, it sure feels good to grab a quick little cash there. Great trade, Jose. And this is where Ron and I had a conversation outside. He goes, get to break even as quick as possible. 3 targets, break even, it's hit. Beautiful. I know you've been working on that one, Jose. Bad top. Big gap. Paul, which one is right? The one that I'm looking at for my trading is, in my opinion, the one that's right. And I know that sounds weird. The difference, there is no difference. This 67 fib is this 67 fib, right? So here I have it superimposed on my 5-1. Or, watch this. If I do this, I look left. And it's the same scenario. I know that I had a pivot that comes from beyond the areas, right? I started to get that odds favorable momentum, but my large are above this area. My large are above this area. The larger up, the smaller up, the trend is down. When we come back to this area, it's hardly advantageous. It doesn't matter if there's a line there or not, right? It's not really a high probability trend trade. So then I have to go back into, well, where are my trigger lines? Well, my large tried to break below 67, but they're literally straddling 67. And if I let the 13.2 lead the way, there's not a high probability trend trade there. Does that make sense, Paul? The only difference is I have to look left to see that 67 fib, but I'm still going through the process. Where are my triggers? What are they telling me? I know that this is an odds favorable momentum as we get back to that area, right? And if I don't have that area and I go, well, it's maybe there. Trade your charts, though. Be consistent. Don't change your plan or your charts to try and get you into a trade. Gary, you're saying that not coming from an area. Well, it's triggers at the fibs, isn't it, Paul? Gary, would have worked as a dangerous phrase. Trading into that termination condition would have worked. What did your 21 say, Gary? Because this would be an edge trade without an area. Make sure that there's rules. So, Paul, everything is triggers, isn't it? Momentum is established by triggers. Termination conditions are established by triggers. Momentum doesn't require the fibs, but termination conditions do. So ultimately, it's all triggers. And you can see how when things don't agree, it kind of becomes problematic. Just go eat a cookie, Gary. Man, I will never argue with anybody about eating a cookie. But you see how the larger up, the smaller up, but the smalls are below the large. So Paul, Basic trigger reading says that I don't have any momentum. Really, either way. It's a downtrend, but the triggers are up. The large are above resistance, but the small are below 2 areas of resistance. That alone's enough to kind of keep me just doing nothing. On my 5-1, the small triggers were up with strength, but both the large and the synthetic were down. Hey, Paul, happy Monday. Who else thinks it's no fun when the market doesn't give me a statistical advantage? I don't. Especially as a new user. As a new user, I'm like, how am I going to get rich in a day if the market doesn't give me trade setups every 8 seconds? How am I going to retire by next Tuesday if the market doesn't give me setups all the time? And it's tough, isn't it? Eat a cookie until we get a setup. Because what happens is everything agrees eventually, doesn't it? Have you ever gone through and just said, can't do it, can't do it, can't do it, and you're like, man, I can't do it, I can't do it. But then you scroll back a little bit and you're like, well, there it said I could do it. And then I'm going to take the trade. We had an idea that resistance may hold. We're in a downtrend, but it doesn't all agree. And let's wait and see what happens when everything agrees. On the S&P, we reached a fib. None of the triggers broke through. We knew that we weren't going long, right? Even though it's green. Even though it's green, we knew that this area may stop the market. So all we can say is I'm just going to wait till it all agrees. And once it all agrees, watch this. Once it all agrees, Luciano, thank you for this picture. It becomes effortless and it becomes easy. And the hardest thing to do, Paul, for myself included, is to just wait until everything's going the same direction, until the momentum is there, until the path is clear. Thala. Took the shorts, got you on the high tick, right? Man. Took the short again. You were. Because Thala, you went short and it just wasn't. But you went short again with everything up, didn't you? This is an opinion trade. The first one I can get on board with 100%. Everything says down, everything says down. But Thala, you're not trading from areas, right? You're hoping that these trigger lines hold. There's no area there, right? And then the second one, you said, man, I sure hope 67 holds. I'm just going to go short again, even though my synthetics are up, even though my smalls are above the synthetic, even though my large are turning against me. And even though my 21 has been cranking up forever, I sure hope this one gives me a winner. 13.2 was showing trend down, wasn't it? I used to do this to myself a lot. So I'm doing this. I'm giving you one of the tricks that helped me. Thala, is that my best trigger look for a short? The trend is down, but am I going to bet the farm on large triggers up and small triggers up? I've done it. I've done exactly what you've done. And that's why right here, I'm on board. But right here, it's an opinion. Do you see the difference? One, you do have everything going down. You got the triggers down, the smalls below the large. I love your first trade. It just didn't work. The second trade was what we call a revenge trade. And revenge trades tend to separate us from our money. I like termination conditions, absolutely nothing in the way. Odds favorable momentum. And just putting an order right there at that area where the market is likely to continue. Guys, so Paul M., it all started to agree, didn't it? Take some of the stress out of the decision. Thala, it still doesn't agree, and look how it's dancing. How much pain are you willing to inflict on yourself? Hoping. I think, again, the first one I can get on board with because of that 67. Yeah, that second one. Hope trade. We all take them, Thala. Believe me, this is not me knocking you. This is just me saying, I've done it. I've been there. Yeah, the second one was a hope trade. The first one, I think you could have defended in a court of law. It's eliminating that second one, even if it wins, because the advantages aren't there. It's pulling those hope trades out. And guys, you're going to break rules for the rest of your life. You're going to take silly trades for the rest of your life. The key is to take fewer and fewer all the time. You're going to start off taking all of them, right? Oh, man. I hope you don't feel beaten up. I tend to not beat people up too much. But we'll talk about it. We'll talk about it, yeah. John Novak used to say the nicest things to me. He's like, hey, Mark, I noticed that you traded into a termination condition. And in my head, what I heard was, hey, dumbass, what are you doing? You're being stupid. Stop it. Self-perception has a lot to do with it. But he's my brother, so I'm sure that that was implied. No, it's okay. It's just part of it, right? Large are up. Smalls are up. Oh, I think my Ninja Trader 8. Yep, there it goes. Sorry, guys. We'll bring that right back up. When you start messing with it too much. So let's use this as a learning opportunity. Watch this. If my Ninja Trader decides to spontaneous shut down, I'm going to go to Documents, Ninja Trader 8, Database. I'm going to get rid of my cache and my tick. Then I'm going to go back to Ninja Trader 8, Temporary Folder. I'm going to get rid of everything in that temporary folder. Then we go back to Ninja Trader 8. I'm going to go to Workspaces, and I'm going to lose that recovery folder. And then I'm going to close this out, guys, and I'm going to log back in. Whoops. And I'm going to try to log in with my caps lock on, which rarely works. But that's how quick the process is once you've done it a couple times. And Ron, I still do my analysis on 7 and my execution on 8 for my Apex accounts. And now here comes Ninja Trader 8 right now. And it's going to bump back up and open those workspaces. And here it comes. And guys, that's a part of it. But if you're an Apex trader, make sure that you've got Apex up. Make sure that you can manage those trades. If you were in a short trade, if you were in a long trade, make sure that from Apex you're able to flatten if you run into a challenge. That comes back pretty quick, doesn't it? And look at that, guys. Thala, it's starting to agree, isn't it? It's starting to agree. I had to be patient, but once I was patient, now my smalls are down, now my large is down, now I'm coming from resistance, now I've had divergence, now I've got a couple divergences. Every chart is facing the same direction. Sure does make me happy. Makes me feel better, doesn't it? And there you go, Gary. What I was referring to, being able to flatten your accounts if something happens. Thank you for that. How was the cookie while you guys waited? 13.2 mid-band will stop it. It'll probably create a bounce, won't it, Ron? Recognizing an area. I love a clear path. I love a clear path, guys. Clear paths give me warm fuzzies. That's loading up right now. As that loads, what do you guys want to talk about? Your NT8 just froze too. Use Apex to close out. Perfect. I'm telling you guys, if you're chugging, have you done this? This is what I did. The user benchmark. Have you guys seen this? The user benchmark. This will test your computer and see where you're at. My computer tested, and it was labeled, my graphics card was labeled a tree trunk. All right, we're calculating in, and it takes a little bit when you go through that refresh process, right? But you can use tools to make sure that your tools are the best they can be, to make sure that you've got your computer doing what it should do. So that you're pretty good. Guys, the market's testing our patience bone today, isn't it? Making sure that we are patient and relaxed and insisting on rules to be met. And my S&P is loading super slow. There we go. There's that 50-50 Gary was talking about. Smalls below the large are wide. They're angled in the direction of the trend. 4150.07 has the potential to break, but it hasn't yet broken, which means that there isn't a clear path. And without that clear path, isn't it okay? Isn't it okay as a brand new user to insist on maybe the best of the best entry? Gary, is the mid-band as a termination? Let me go to the education page and click on that. So a large sharp mid-band is a termination if the large triggers are a full bar away. And why is that? Well, that's because of the gap theory. If a mid-band is reached and those large triggers are a full bar away, guys, the gap theory says no shorts. The old gap theory. If Fibonacci resistance is reached and those large triggers are a full bar away, no longs. Resistance reached, large triggers are a full bar away. Gap theory. Over and over, guys. Gap theory, gap theory, gap theory. So Gary, while I like that you put the picture on there, I'm not 100% sure that that mid-band is technically a termination condition. I think I've got some corrupt data in here somewhere. I'm going to rebuild charts this afternoon. Luciana, let's see what you did. Not exactly, Luciano. The top of the trigger is there, but look where the pullback to the large triggers would happen, 41.54, right? So I'm glad that you posted this picture. When we're talking gap theory, the large triggers act as one unit, right? Both lines are one unit. So Luciano, if both are above that reversal bar marker, absolutely, that becomes problematic. If both of them are below the reversal bar marker, absolutely, it becomes problematic. Because what does the gap theory say? And let's do, and this is pretty cool. Let me show you off of your picture. So what the gap theory says is if those reversal bar, if that large triggers are a full bar away, price is likely to close the gap back to the large triggers, right? So there's where your gap is closed to the large triggers. There is where a full bar can be formed. Does that make sense visually? Awesome. Thanks for posting that. I think that was a good opportunity for a little bit of clarity, which is amazing. That's what we want, isn't it? Clarity over and over. So there's your 50-50, smalls below, large haven't broken, divergence is printed. There's only one spot in that window of opportunity. Well, no, there's two. There's resistance. There's a mid-band. It's not high probability because the large haven't broken. Our small issue exists. Divergence is printed. That could be considered a small issue. If you waited for a market flow signal, you're probably already out of this trade. Some of you will say if divergence prints, I'll wait for a higher spot in the window. But ultimately, we haven't broken here, right? It's a medium probability trade. It does have challenges. And what do you think? Anybody get short in crude? Oh man, Jose, it sounds like we all went at the same time, huh? So let's go through it. Odds favorable, everything says down. Here's the first one. And guys, some of you don't like split triggers. I don't care for it either. There's my window of opportunity on the first short. No divergence, smalls outside. And it's from about 56 to 61. I've got approximately a 5-tick window. When the next one comes down, the trigger lines are stronger. But my window's grown a little bit, hasn't it? Here I have approximately a 9-tick window. Could have taken either, right? If you took the first one, you probably got paid all the way down. First was 50-50, second was wide open, right, Gary? 50-50 with no divergence, tiny window of opportunity. Doesn't that fit your rules 100%? And guys, I'll remember your rules. So you were short where at 56, Gary? Took that one? Nice trade. That was a nice trade too, wasn't it? Guys, if you didn't take one of these trades, let's talk about it. Post a picture with why you did or why you did not. Gary, why didn't you take the first one with no divergence if it fits your rules? And then support gets reached. How many of you went short at 44 saying, dang it, I missed the perfect ones, I'm going to go short now? That's pretty common. 50-50, still trying to work it out, isn't it? On the S&P. If you got in up high around 51.75, you probably took your $100 and went break even, and now you're saying they can come and get me. Or maybe they won't. Where is my window of opportunity on that first short? From 50 to 52, right? Market still hasn't made it outside of that window of opportunity. Only one divergence is printed. There's the potential for divergence. Your risk is already established. Medium probability trades require that you manage aggressively, manage assertively, maybe take quick profits, recognize the trouble spot. Pretty cool, right? So now you're just in a position where you're saying, I had a termination condition. It created a full reversal. It gave me odds favorable. I have an area with the potential to hold, but odds favorable momentum says that it also has the potential to break. I was able to identify where the market is likely to continue. It never went outside of my window of opportunity. And I never got a second divergence with weak triggers, which means that there's no management opportunity yet. And now it's just driving you mad because it's taking so darn long. In a perfect world, you would have taken the first and added on at the second. Nice trade, Gary. No reason to hold so long, right? Man, support on every chart, not a trigger on every chart. You got out way up high. Make that money, man. Get out at 27. Wait for the next one. If you want. I'm not telling you what to do. Guys, I'll never give you trade advice. Carl, termination, odds favorable, perfect entry. Knowing that this green line could be a fly in the ointment, you took your exit, you made some money. $100 on 2 contracts, nothing wrong with that, right? That's $200 in the bank. That green line on an 8 range lets you know that all of the buyers got together and said, hey, let's mess with the sellers right here. Right at that area that hasn't broken. Nice trade, Carl. Way to get in, get out. Not every trade's a home run, right? Sometimes you just got to knock a couple singles, the occasional double, get paid. Nice job. What does the 13.2 say? Up or down? It says down, right? It says down with momentum. 5-1 says down. 8 range says down. If you took this trade and you are waiting for a reason to manage out, you haven't been given a reason yet. So if you exited, you have to be okay with your exit. If you had rules for it, my rules on a 50-50 say that I don't have a reason to get out of this trade yet, especially from a termination with the momentum. Not yet. If this is a higher divergence, that higher divergence is going to be true right about here, right above that pivot. I've already made money on my first contract, maybe my second contract. I'm willing to risk 3 or 4 ticks to go with the momentum, to go with the direction. And if divergence prints, well, I'll exit. Does that make sense, everybody? This negative number, this divergence potential, is just potential. I've seen the market move 100 points in one direction with divergence potential the whole way. Until it prints, until that cyan line is true, that's your first date, dinner, movie, walk into the front door until you get to that first kiss and it actually happens. You don't get that first kiss. It's just potential. Good stuff. Guys, I'm going to take a few minutes, walk a lap, stretch my legs, drink some water. We'll leave you. We'll see what happens with this one. If you take a trade, post a picture. If you have a question, let me know. And we'll talk about it. I'll be back in just a few minutes. Last hour is going to belong to you guys. Guys, I'm not going to be shy about going mic silence a little bit. I'm going to let you guys lead the way on the last one. I'll be back in just a few minutes. We go last hour. It never gave a reason, did it? Never gave. Oh, there's a second divergence with weak triggers. There's your reason. Paul, what'd you do? Let's see what you got. Paul says good top. He says smalls outside. You had a perfect entry, right at triggers, money, money. And man, you held on for a while, didn't you? Nice trade, Paul. Thala. It all agreed, didn't it, Thala? Strong triggers, everything says down, pull back to resistance inside of favorable large triggers, quick money. Every chart says the same thing, and it's like the same thing happens, right? Everything said down, everything said down, everything said down. 50-50, strong triggers, only one divergence. Perfect entry spot. Now you have a second divergence on a 50-50. Pretty awesome, isn't it? You know what's cool, Thala? Is if you take a little bit off early, and this is what people, this is hard, right? If I'd make $200 a trade, and that's it. No home runs, no big runners, no going to the next area. And I do that 5 times a day. Guys, $1,000 a day isn't a bad way to live, right? It went up now. What did? Your trade did? Show me a picture. Let's look at it. Let's see if it gave any indications of why. I don't have a gold chart. There's crude oil. If you took the first short and you got paid all the way to support, you were like, heck yeah. And now there's a 50-50. The market's exhausting itself a little bit, isn't it? You've already got 2 divergences right from that fib. You've got another divergence. Your triggers are weakening. It may continue down, but we're giving away some momentum advantages here. We're trying to get through that spot. Waiting for that clear path. Thank you, Thala. Let's see if there was any indication. So if you're looking at the 21, I firmly believe if you're going to have a chart, use it, right? So what do you guys think about this one? Price accelerates away from the large triggers. The large triggers remain more than a full bar away. And this is a 21 chart, right? It's a giant chart. It's a slower chart. But if I know that this is happening on a larger time frame, and I get 2 divergences with a higher divergence and the trigger line's coming up, I can use that higher time frame and say, man, that's a bounce point. That's a termination condition. If I take this trade, I have to manage assertively. Thala, you got paid. And what else do we see here, guys? Bad top, right? Not a termination condition on the 13.2. This is a pivot from the middle of nowhere, which means that mid-band's the first target. So this mid-band that is a termination condition lines up with the first target from a bad pivot and is supported by multiple divergences on the 5-1. Do you see how all we're doing is we're reading charts and putting it all together? We're starting large and we're funneling down. And Thala, this is all stuff that you're going to do second nature. The more you look at things, the more patterns you're going to notice. Thala, do me a favor on your 13.2. Will you do this for me? Take your 13.2 and squeeze it together. And I bet you there's Fibonacci resistance right up here. Put a circle on it. And let's see if that price goes up to it. Because when I get a pivot that doesn't come from an area, let's see if we can find an example. Pivot from beyond the area, pulls right back to support, finishes the move to the key area. We're trading patterns, right? That's coming from a termination condition. And it doesn't always happen. There's that pivot from beyond, pulls back to resistance, keeps going. So remember, it's not a guarantee. Not a guarantee, but when you see this pivot from beyond the area, mid-band, you still have to get above resistance, right? So there's no long trades. And you're being a little bit leery on the short trades. Let it pan out. But 2000.7 is a possibility. What we call unfinished business. And we'll see what happens. You still have to read your indicators. It's not a trade. And then, well, once you get odds favorable momentum and no termination conditions, then it's a potential long, right? That 50-50 on crude is still playing, isn't it? Still trying to figure it out. But every chart agrees. That S&P is making it through 1, 2, 3 divergences, weak triggers. Just reading charts, that's all I'm doing. The key is to not miss the easy ones, right? Son of a gun. The key is to not miss the easy ones. The key is to get the ones where every rule has been met. And then once every rule is met, take the trade. Go through that process. Learn the trigger line and Fibonacci rules for when it's okay to trade. That's the key right there. If you're not sure, you got to ask questions, right? Simulate your trades daily. Every time you think you see something, take a trade. Every time you're like, man, I'm pretty sure that's a high probability trend trade, take a picture, write your rules on it, post it in class, let's talk about it. Simplify your plan. Who's done this? You ready? I'm going to raise my hand because I've done it. Who started to get good at reading their charts and started trading based on what you read rather than what your rules said? Has anyone done that? I've done it. Well, this is a pattern that I recognize. I'm just going to go short. I did it this morning once and caught myself. I got run over in gold this morning because I formed an opinion on a read rather than waiting for my rules to be met. I've done it. Post it in class and we'll talk about it. And I'm telling you, that reinforcement keeps you from doing it more. Simplify. Keep it easy. You don't need all the trades. You need the best trades. Have more contracts. Use market replay. You can go back and practice, right? You can go back and practice over and over. You can practice management. You can practice entries. You can practice anything you want to practice. I took this picture this weekend. John Novak and I talk all the time. That's about 1/10 of the pictures that he sent me from his market replay this weekend. Every time he thinks he sees something, he'll go back and he'll replay a week's worth to see if it repeats itself, to take pictures, to annotate charts, to draw arrows. Guys, this is the CEO of the company. This is a guy that's so good at reading these indicators, it's ridiculous. He's doing 5 to 7 hours of market replay every weekend. to be better. Take all those pictures, guys. Repeat this process until you're always taking the correct trades. That's how you're going to do it. Hey, look, NinjaTrader 7. Termination condition creates a full reversal. Full reversals creating odds favorable momentum. Odds favorable momentum. I don't have rule number 3 met yet, right? What do you guys want to talk about? Don't be shy. It's like going to your grandma's house. Shy people get hungry. I'm going to see if I can bring 8 back up one more time. I'm just going to go through pictures. I'm going to talk to myself for a while, guys. I'm going to try and say some smart stuff. Wish me luck. I don't always say smart stuff. We'll talk about windows of opportunity. Looking for that best entry because the best entry creates easily managed trades, guys. Doesn't this look like what just happened in gold, Thala? Great entries make manageable trades. Reversal bar. There's only one line inside of favorable large triggers. Gives a great entry, minimal risk, opportunity for profits on the first contract. Probably managed out. One-to-ones don't matter. They're outside of the window of opportunity. Reversal bar prints from the top of the triggers to the bottom of the triggers. Mid-band, one-to-one, window of opportunity. Once that reversal bar prints, reduce your risk. Support's outside of the window of opportunity. It's not a part of it. Reversal bar prints, top of the triggers to the bottom of the triggers. One-to-ones in the mid-band inside that window of opportunity. Support is outside of the triggers, therefore not in the window. Guys, you can go back and do this all day long on a 5-1. You can go on a 13-2 and do nothing but circle odds favorable momentum, right? And you can do this over and over and over until these pictures become burned in your brain. Chart reading things. 50-50 with divergence. I wonder what that means. Well, it means that if I'm 50-50 and divergence prints, it's probably not my plan. But if it's 50-50 at a divergence low and no divergence prints, I'm going to get paid. Because that's the study that I did, because those are the pictures that I've taken, I'm putting it into my chart reading things. Split trigger lines. Favorable large triggers, one on top of the other, creates a tiny window of opportunity. When those large triggers, weird, it won't let me do this. When those large triggers are split, you don't know, is it going from the top, is it going from the bottom? Recognizing the best of the best looks, committing them. HVA causes second divergence. If I took the long, this high volume area on the 8 range is right where that second divergence is coming from. It's a pattern that I can recognize. Guys, these are all pictures that I've just taken. Throughout the years, mid-band is a termination condition. That's chart reading, isn't it? Price reaches the mid-band. Large triggers are a full bar away. Look how that long gets absolutely slaughtered. Directly into a termination condition. Market gets slaughtered. There's that vacuum. Once again, all I'm doing is taking pictures and I'm coming back. Losing momentum on the 13.2. Deeper push down. Losing momentum on the 13.2. Deeper push down. Because this is a pattern that I recognize, we took this picture in class, losing momentum on the 13.2. And sure enough, I gave a deeper push down. Guys, see what I'm doing here? Losing advantages. Anything can happen triggers. Loss of momentum. Losing advantages coming into. Who's using their spreadsheet like this? Who's taking pictures all the time? 50-50? Divergence prints? Huge window of opportunity? Are you taking this trade? Some people will. Some people won't. That's a lot of chart reading on a picture that doesn't even have a trade, isn't it? Look at that window of opportunity. From 21.25 all the way up to 27. 5.5 point window. Who's comfortable taking an area might break with 7 points of risk? Not many people. Split triggers again. We already saw that one. Reading divergence. Loss of momentum. Loss of momentum. That was your first shot. A second loss of momentum. And it pushes it up. Just reading divergence. Termination condition. Creating a bounce, isn't it? That's the ES. We'll bring crude oil up. Gary, you say, let's see what happened here. 50-50, multiple divergences. You chose not to take it. Nothing wrong with that. Chart reading says take the trade. Rules say no. Chart reading does not say take that trade, Gary. Chart reading says don't trade into support, silly. You're going to lose your money. Right? Chart reading says you've lost momentum. Chart reading says that you've lost momentum a lot. Chart reading says you've reached an area that no trigger lines have broken through. Guys, chart reading tells you without question, don't go short. Your desire to be in a trade may have said, why is that on there? Get off of there. 50-50 trade, right? Watch this, guys, on crude. 50-50, one divergence. If you took it, two divergences creates a problem. Three divergences creates a change of direction. How's that for patterns? Can we put this one in a spreadsheet and annotate it? Whoops, drunk fingers. Three divergence ends the trend at a 50-50 on the 13.2. Save it to screencast, right? Open up my spreadsheet. We'll go to chart reading. Once I go to chart reading, all I do is I put that link in there. Guys, you should be building your spreadsheet like this every day. There's 1,000 opportunities every day. That you can come back. Pivot from space, finish the move. Thala, do you remember this one? Pivot from space, all the way back to support, finishes the move. What's gold doing, Thala? Did it decide to go up or did that resistance hold? Good morning, Ben. Always curious to see those after the fact. $50-50. 3 divergences. No reason to give that money back, right? Just no reason. Termination condition. Creating a full reversal. I feel like my internet is having challenges right now. All right, guys, I have rambled and babbled as much as I know how. I'm going to hit my mute button. If you have a question, post it. If you have a chart read, post it. Otherwise, we're just going to wait for something to happen. The pool is too far away from the router. Man, my router, I can almost reach out and touch it. No, the market isn't. But that doesn't mean there's nothing to talk about it. Talk about, does it, Gary? Are all of you telling me that you're so darn good at chart reading that you don't have any questions about any pattern you've ever seen in your life? You don't have a question about gap theory. You're not curious about termination conditions, maybe the mid-band. You're not interested in maybe showing me a picture, asking if you could have managed differently than you did. And that's okay. But gosh, you've got me, right? And if you ask a question, it's a private session. Done, Bobby. Thank you. Bobby doesn't even need help with this. He's just trying to keep me busy. Thank you. The slingshot pick. Terminations. When is the mid-band? A termination. Mid-band's a termination condition when price pulls away from the synthetic triggers too fast, excuse me, and too far into a Fibonacci area. Excuse me. Guys, give me 1 second. I'm choking on my own spit. Wow. Price pulls away from those synthetics super fast, right? Hits an area, likely to snap back. And everything about that one, Bobby, revolves around your large triggers being below the reversal bar marker. If it hits resistance, large triggers don't follow. Not a short trade. It's a reason to not take longs yet because it may close that gap. Resistance, large triggers remain below. Not a short trade. But if you see this termination condition and the odds favorable, it gives you the opportunity to recognize that price is likely to go back and close that gap. And you'll see it Price accelerates all the way away from those large triggers, hits support. See how the large triggers don't follow? Gives you the opportunity to not look for that short because of that key area. We'll see if we can find others. What we do see is termination conditions for the win over and over here. Price hits those key areas. The large triggers are a full bar away, Bobby. It keeps you from looking for that long somewhere up here. You know that it's likely to close those gaps. Does that make sense? Price hits the mid band, large triggers don't follow, and it closes the gap. And guys, it's not a trade. People's like, well, how do I trade the gap? How do I trade that gap, Mark? You don't, unless you have rules for it. But what it does do is it keeps you from looking for that short when the large triggers don't follow. Right now, price reaches support, but see how the large triggers aren't above? So the gap theory isn't in play right here, just the termination condition. And then we also have 1, 2, 3, 4 divergences on your 5-1 at a key spot, kind of compounding, not looking for that short. I like to go back and study those, take pictures of them, and I'll start putting them into my spreadsheet. Mid-band is a termination condition. Mid-band's hit. Look where the reversal or where the large triggers are. No longs in the vacuum. So if it's something that you're working on, start taking pictures of them. That one's labeled vacuum, but it's not, is it? That's just a great looking short. Here's one that says, oh, dead link. Somebody took their picture back from me. I like to scroll back, Bobby. Gary, 50-50, one divergence, tiny window, even had confirmation, finishes the move. Why did you miss it? Did you second guess yourself, or were you not in front of the computer? And I always ask that. Because if you're second guessing yourself, then you don't trust your rules yet. Carl didn't miss it. Carl, beautiful trade. All the reasons, right? All the reasons. Trend short. Strong's very wide, large trigger's favorable, add a termination condition, but with the momentum on all charts, it says go. So what you're saying is you're willing to take a shot on this look where the smalls are getting through, but the large haven't, because you have a tiny window of opportunity inside of favorable large triggers. I like the management, to be honest with you, Phil. You are at that potential termination condition on every chart. If you take the 50-50, this is your first management opportunity. So you, at this point, you make a choice. Are you willing to hold through a pivot stop out, or are you exiting with a second divergence on a 50-50? My plan says exit with a second divergence and the small triggers inside on a 50-50. And because my plan says that, Phil, all of this that happens after, I don't care, because it was a rules-based exit. If I were to take this trade, you and I would have 100% mirrored image, like 100% exactly the same. Double divergence, weakening triggers. That's a pragmatic rules-based exit, isn't it? Doesn't it make sense, Phil? The area is not broken yet. The triggers are showing weakness. You're seeing a slowdown. It's hard to not give a crap. Yeah, when it goes without you, right? And it makes you second guess. Oh my gosh, maybe I should have done something different. Maybe I should have held it. But the reality is how often does that second divergence, does that push down mess up your trade? And that's where statistical advantages come in. This one ended up going to the next area, but how often does that second divergence with weak triggers kill a 50-50? And it's a lot. So I love everything about it. I think you managed it without emotion and intelligently. And then Tammy, 50-50, beautiful entry, quick profits, second divergence, and you exited. I think it's amazing management. So Tammy, the exact same talk with you. If my rules are met, I enter the trade because I trust my rules so much that I know they provide a statistical advantage. Guys, that's the first piece of the puzzle. The first thing that you're going to do is great entries, right? Because great entries create manageable trades. And this is why I tell new users, spend 30 days on nothing but entries. Don't worry about what happens next. Spend 30 days just focusing on entries. And then after that 30 days, or during that 30 days, a mechanical approach eliminates emotion or opinion, tends to be the most straightforward approach for new users. And here's the key one. You can alter your plan after you're done with your education, after you can read your charts. If you trade 2 contracts, doing that initial stop, $100, $200 contracts, allow yourself 30 to 90 days to practice the mechanical approach to a checklist-based entry and an automated exit, and then you'll adjust based on your experience later. And Phil, what you did there, Tammy, what you did there is you adjusted a management plan and you turned it into a pragmatic reason based on losses of momentum on trades that didn't have a clear path. I think both of you absolutely crushed the management side of it. New users typically don't have that in them. Not yet, but you'll get there. Carl took the 50-50, takes the perfect entry, never had a reason to change his path, and ends up taking profits. Carl, can I ask you, if you had gotten a pivot stop out, a second divergence right here, would that have been an exit condition for you? Having a reason to do everything you do, guys, is imperative. It takes the gut out. It takes the emotion out. It takes the hope out. And that having a reason because something happened is key, but also not exiting when you don't have a reason, not arbitrarily moving your stops. You smell like low tide. Oh, geez, Ron. Have a reason for everything. There's your reason right there. There's your plan. Every time you see something happen, put it on a spreadsheet. This one says 50-50, no trade. I wonder why. 50-50 from a bad bottom. And up 50-50 down here. Divergence prints. Not taking the trade. Phil, you're happy with this management? Let's see what it is. Why wouldn't you be? Beautiful entry. You know where the trouble is, right? Right at a mid-band, right at 1-to-1s. 46 to 30, 16 ticks, $160. Nice. And it's still a 50-50, isn't it? It's still a 50-50. So you've identified your trouble spot. What a great place to take profits rather than hope. This is where if I'm trading 2 contracts, Phil, My first target is right there at 29 or 30, right where yours was. And then I'll usually go break even. And if divergence doesn't print, then I'll stay in. Divergence prints, I'll stay out. But taking quick profits is wonderful, isn't it? And I see that long that you didn't share. Got stopped out. It's hard not to hope. You'll get to a point, and this is a true story. You'll get to a point where you stop hoping. And if you find yourself hoping, it becomes a red flag. Because what happens is when you really trust your rules, and this is coming from experience, you'll stop expecting to win every trade because you know that's unrealistic, right? And it develops over time. And what's funny is your brain some days will pick up on it instantly and you'll self-correct, and some days you will hope over and over. And then 3 trades deep, you'll go, oh my gosh, what am I doing? Take a break, walk a lap, give myself a timeout. But when you stop expecting to win every trade, you really start winning more because that hope goes away. You start managing because of rules. You start entering because of rules. And you'll get to a point where you don't care about the result. And you don't care about it because if you know you take 100 trades, you're probably going to win 70 of them, right? So you've gotten to the point to where you quit basing whether you're a success or a failure on one trade. You're looking at 20 to 25 trades, right? And because you're not creating the expectation to win every trade, you're not disappointed, you're not emotional. But you can always go back, right, and say, man, I followed my rules. And what do I know about my rules? The one thing that I know 100% about my rules is that they win more than they lose. And I know that I executed them perfectly, which means that I had a statistical advantage, which means that if that market absolutely flattens me, it's just a cost of doing business. And it takes a while to get to that point, but that point comes from trust in your rules. Moving your stops without a reason comes from not trusting your rules. Entering early comes from not trusting your rules. Exiting early comes from not trusting your rules. Moving your stop arbitrarily because you don't want to give any money back comes from not trusting your rules, from not having a plan. So that's one of the reasons why I spend so much time talking about rules met, rules not met. My crude chart has 100% stopped right there. I don't know what crude is doing. I'm going to try and reload it and see if it moves, but we've been stuck at 77.29 for a while. I think my computer is having challenges today. Yeah, I was definitely frozen, Jose. I'm going to refresh and see what happens. If you ever notice the price not moving on a chart, guys, something's wrong. So we'll let that reload. But the fact that my desktop thing is stuck right here, I'm inclined to believe that I'm in need of a reboot and just kind of start fresh over here. It's a lot of rambling, right? I like this one. Nexgen Ben says it's obvious. What does that mean? I mean, every chart says the same thing. I used to hate that phrase obvious because what's obvious to me may not be obvious to you. But we can all agree that if every chart is red and every trigger is down and there's nothing in the way, we can start that as the basis for obvious, right? Used to hate that word. And then thank you, Ben. We adopted your idea of what obvious is, and it helped a lot. Gap theory. There it is again. Over and over. Who's got a spreadsheet? If you took a picture of your spreadsheet right now under Nexgen Trader Favorite Looks and posted it in the room, would you say to yourself, man, I'm doing a lot of work? If you looked at your trade tracking sheet and posted it in the room right now for me to see, would you be like, heck yeah, I'm following the path? Or would you say to yourself, man, I could probably do better? I could probably start taking pictures a little bit more. I can start recognizing patterns. I mean, hell, I want to do this for a living, right? I want to quit that job. I want to be successful. Maybe I should put a little more effort into it. Yeah, my crude oil chart is just dead. I think my computer needs some love. We're going to do a full rebuild today. It's fun to do. Maybe. I doubt it. I doubt it. And it depends on what part of the country you're in, too. Your 7's having challenges, but your 8 isn't? Okay, so maybe it's just 7 having problems. I'm not sure. I'm going to close mine out, and we're going to do the rest of the class without live charts for now. Tell you what, one thing I noticed is I was in Houston last weekend. Your 7 is fine. And gas prices were $3.09, I think I paid for regular unleaded. I paid $4.29 here in the Pacific Northwest. And I have no idea what creates that discrepancy other than maybe people are willing to pay it. Could be paying for the scenery or something. I'm in Oregon, and I'm sure it's Oregon tax. They tax the hell out of you here. Same thing, yeah. Alaska, Gary, I am like right next to Alaska. Ron, you're one of those guys. Uh-oh. When I lived in Arizona, those golf carts were everywhere. They were dangerous. All right, guys, so here we go. Here's your plan. I think we're going to call it 10 minutes early today. Market's not giving you pictures to give to me. Don't seem to have any more questions. And my computer needs an enema, so I'm going to do that real quick. Guys, I'm back every day, Monday through Friday, 9 a.m. to noon. I'm here to answer your questions. I'm here to give you feedback. I'm here to help you with concepts that you need help with. Every time you ask a question, it is like getting a private session with me, guys. Be stingy, right? Be stingy with your time. Don't worry about the other people. Thank you, Tammy. I appreciate that. Don't worry about whether or not your question is smart enough to be asked, because hopefully it's not, because then you'll know the answer next time, right? So you'll be good. That's it for me. Have an awesome afternoon, guys. I have sunshine here. You're old and out of medicine. Get out of the way. I love it. I'm going to go swing golf clubs. See if I can get a sunburn. Fingers crossed. You guys have a great afternoon. We'll be back tomorrow morning. We'll do it again. You can have it, Gary. I will see you guys in the morning. Take care, everybody. Thanks for being here today. Be good.